This is Money Talks, a podcast hosted by the Job Opportunities Task Force, where our mission, as always, is to help lower wage workers advance to higher wage jobs. I'm your host, Christopher Dews, and let's get into it. Today, we have a very special guest with us, Michael Delong from the Consumer Federation of America, specializing in all things insurance. Specifically for this conversation, we'll be studying auto insurance. Now, what does auto insurance have to do with ensuring that people have access to employment? Well, it's kind of simple. If you have to drive to get to work, then you're going to need a valid driver's license, a vehicle, and of course, affordable auto insurance and able to secure that position of employment. In Baltimore City, for example, only 9% of the jobs can be reached within 1 hour, one way by public transportation. That being said, if you're going to have a job, you're going to have to deal with the auto insurance industry. And unfortunately, thanks to research that's been done by the Consumer Federation of America, we've discovered that there are vast disparities when it comes to cost of auto insurance based on a variety of non-driving factors such as credit history, zip code. In fact, it was studied that the Baltimore-Towson Metropolitan Region has some of the worst auto insurance disparities in the nation. And so the group that's been really looking at that from a national perspective and even doing statewide research and work has been the Consumer Federation of America. And so we have Michael Delong here today with us to join us in on that conversation and kind of break it down, explain how we got here and some of the work that he's working on right now and some policy solutions to fix these current issues. Michael, thank you for coming on.
Thank you very much for having me. Glad to be here.
All right, so let's start with the basics, Michael. So what is the Consumer Federation of America?
We're an association of nonprofit consumer groups, and we've been around for over 50 years now at this point. We originally got founded in 1968 to advance consumer interests through research and advocacy and education. All too often, consumers were being ignored and people were paying attention to businesses and to large corporations and other folks, but not to the average consumer. And we've expanded, and now we have over 250 members in a lot of places around the country, including Maryland, where we work with one of our members, the Maryland Consumer Rights Coalition. And we work on a lot of different issues, from consumer protection, ensuring products are safe, promoting energy efficiency, protecting the environment, capping interest rates and stopping payday loans, housing, food safety, and most of all, insurance. I work mostly on auto insurance and homeowners insurance. And we originally started working on this because we were hearing stories about people who were struggling to pay for our auto insurance, or they would move from one area to another and their premiums went up, sometimes very dramatically. And then there were other people who had complaints of being unfairly discriminated against. So we started digging, we started investigating and doing research. We were helped by some great people. We used to be led by Bob Hunter, who is a former Texas insurance commissioner and a very smart actuary. And what we uncovered was some pretty intense discrimination.
Oh, wow. So I guess this is a strange question, but I'll ask it. Did CFA start with looking at auto insurance, or did you guys kind of lean into that direction as you were just finding out more and more consumer issues? Like, what drew you to the auto insurance disparity market, I guess?
We gradually started getting more and more involved in doing investigations. For instance, we originally started out, say, about consumer safety and product safety. And then we branched out into more financial issues and things and helping people who are lower income or living in poverty. And then we would also hear from many of the people living with lower incomes or living in poverty that one of the things they struggled with was affordable auto insurance. And so we started asking ourselves, why is that? And went from there and started looking at auto insurance and found, these premiums in this area look significantly more expensive than the premiums in this other area. Why is that? And so one thing led to another, and we started getting more and more involved and realized we have a serious problem on our hands.
That's incredible. I know that recently you guys spoke out in DC about the cost of auto insurance, specifically looking at the district. I guess I kind of want to know, how did you all secure that invite and what did you hear? Like what did you see as the disparities there?
We actually have been working with the District of Columbia Insurance Department for a few months, and this hearing was public. It was on a bias in auto insurance, especially as it relates to technology and rating factors. And we testified about how various non-driving factors that auto insurance companies use result in people paying more. And we heard a lot of good testimony, some of it from consumer advocates, some from individuals, and we heard some misrepresentations or by insurance companies that were trying to minimize the problem. But overall, it was quite a good hearing. The department is working to collect information about unfair bias in auto insurance and to try to figure out how to stop it. And they've actually hired an outside expert named Kathy O'Neill, who has experience about combating discrimination and finding unfair bias in algorithms and data models. And the issues we've seen in Washington, D.C., they're pretty similar to Maryland. There's lots of discrimination. Too many people are paying high costs. Too many people are being treated unfairly.
So can you explain for our audience what actually drives up auto insurance costs, specifically for lower income or entry-level workers from lower income communities? This is important to us at the Job Opportunities Task Force because we have done workforce development. We've done job trainings. We have a construction training program now called Better You Construction. And what we're seeing is that individuals, we're talking with no record, as they've never driven before at all, but they're getting their first job really and trying to now get to work, and they're being charged $275 based off of their, whatever, I guess, where they live and what their current income is. But it's just unaffordable to the point where individuals, they're just either choosing to drive without it because they're not going to risk a lack of employment. So can you just tell us, what is it that actually drives up the cost for auto insurance?
Of course, there are a lot of factors that go into auto insurance and exactly what your premium is. But what we're focusing on, one of the things that drives up costs the most for low-income workers is that auto insurance companies use a bunch of factors that actually aren't related to driving at all. And they use them to unfairly discriminate against consumers and charge them higher premiums. And these factors, there are a bunch of them. They include someone's credit history, your zip code or neighborhood, gender, what education you have, whether you went to high school or graduated from college or have a master's degree, what kind of job you work at, whether it's a high wage one or a low wage one, and whether you're married. And in Maryland, we found that this discrimination can result in people paying hundreds or even thousands of dollars more. I'm going to break down just a couple of the factors because this is a big topic. But basically, one of the biggest ones is credit history. And how do we know that credit history impacts auto insurance premiums? Well, we recently got data on auto insurance premiums for every zip code in Maryland from this one data broker. And we analyzed it, and we found that people with fair or poor credit pay a lot more than even if they have perfect driving records. Just to break down some numbers, statewide, Maryland drivers, if you have excellent credit and a perfect driving record, you pay an average annual premium of $833, which sounds fairly good. But if that very same driver, again, they have a perfect driving record, no crashes, no claims, no tickets, but if they have fair credit, their premium goes up to $1,100. And if they have poor credit, but again, a perfect driving record, their premium rises to $1,401. You're paying like over 50% more just because of your credit score. And we discovered that we tried this in a bunch of different zip codes just to make sure and to break down and see what was going on at like a local level. And we found that in a zip code in Silver Spring, drivers were paying about an average annual premium of about $962 with excellent credit. But if they had fair credit, it went up to $1,295. And if they had poor credit, their average premium went up to $1,673. It was about an increase of like almost $400 and about 74% more. And in certain parts of Maryland, including Baltimore, actually, we found that discrimination is far worse. We looked at some zip codes in Baltimore, including one where median household income was about $33,500. And we found that people with poor credit could pay on average over $3,000 compared to people with excellent credit who were paying about $1,700. So even if you have a perfect driving record, if you live in this one zip code in Baltimore and have poor credit, you're paying over $1,300 more. And remember, this is in a zip code where the median household income is quite low. That's a pretty huge burden. And we found similar results in other parts of Maryland, and we've actually done analyses in other states. But people with poor credit history wind up paying more, sometimes appallingly more. And when it comes to zip codes, we've seen similar patterns. Auto insurers use your zip code to discriminate against you as well. Now, they claim that this is because of density and increased risk. And to a certain extent, that might make sense. If you're in an area where there's like more cars and more opportunities for an accident, it might make sense that your premium is a little higher. But we also found that the drivers pay dramatically different rates for auto insurance based on their zip code, beyond what you would expect just if some place is a bit more dense. We found that in a zip code in Baltimore, which is mostly African American, the zip code is, I think, 21216. After that, people in that zip code pay about $2,400 for auto insurance. But there's another zip code, 21211, which is just a couple miles away, mostly white, and they're paying on average $1,700 for auto insurance. So you've got two zip codes. One is mostly Black and only 2 miles away, but they're paying about $700 more for auto insurance on average. And we found some cases that are even more dramatic. We found that there's two zip codes that are literally right next to each other, yet one zip code is paying about $600 more on average for auto insurance. Other factors, there's similar discrimination. Consumer Reports and some other groups did a study, found that insurance companies charge people more if they work in like a low paying job, like sometimes 10, 20%, even 40% more. And as you mentioned earlier, in most places in Maryland, you need a car to quickly get around because public transportation is time consuming, it's not always reliable, and in some places it actually may not even exist. So we think that the use of these factors is quite unfair. And auto insurers fight any attempts at transparency so we can easily figure out what's going on. But we strongly suspect that they are using most of these factors as rough proxies for income to discriminate against poorer consumers. They don't want poorer consumers. Instead, they want to favor wealthier consumers who have more disposable income. These folks can buy additional insurance projects, like say, if they buy auto insurance, they could also buy homeowners insurance, or they could also buy, like say, flood insurance or life insurance. And the insurers want to make their products more attractive. And when all this unfair discrimination, it drives up insurance costs. And when people can't afford auto insurance, they either can't drive, which inhibits a lot of economic opportunities, or they have to drive illegally, which puts themselves at risk and drives up costs for everyone.
And, doubling down on that, one of the things that I was just doing my research on this, Maryland has, according to the, Department of Transportation, Maryland has 4.3 million drivers. And simultaneously, according to the Insurance Information Institute, 14.1% of those drivers drive uninsured. That's roughly 600,000 individuals in the state of Maryland who just drive uninsured, primarily because of the factors that you just mentioned. And if they can't afford it, I mean, like I said before, if you're a lower income person and you just secured a relatively decent job and you want to go to work every day, I mean, it sounds like a criminal justice issue. Well, you shouldn't be driving without insurance. But if you really can't afford it, and now we're going to incarcerate you for trying to go to work because you can't afford auto insurance, then now we lean into the aspect of criminalizing poverty, right? You just don't have the money to pay it. And you know what? I'll take it a step forward. Even if you do have the money to pay it, right? That's still an egregious amount. We're talking the difference between $1,700 annually and $3,000. Yeah, the people paying the $3,000 are those of a lower income background, but those paying the $1,700 are of an upper income background. I want to just dig deep into something that you said about the difference between why insurance providers might be targeting wealthier consumers with lower rates because they can bundle compared to poorer consumers. Now, it just kind of seems like it should be in the opposite, right? That if you wanted to secure more customers, that you would choose to fund or at least to give a more rational rate to individuals of, let's say, a lower credit score or a lower credit history, that you wouldn't use that type of factor because you're going to piece out of the market altogether an entire group of people who just can't afford it. So I guess I just want to know your response to this. Why it kind of seems like the goal is just ensure that those lower income persons are not insured whatsoever. Is that the argument, or is there something else that's being said? Because it seems strange to me that you would raise the cost of auto insurance for an individual because they have a lower income job. Feels like it would be the opposite, for example. You have any response to that?
Yeah, there are several possible reasons for this. One is that the insurers do sincerely think that credit scores, someone's credit history, and if they have a poor credit history, that makes them riskier to insure. We don't think that's the case. You can have a poor credit history for a variety of reasons. Like someone could be irresponsible and just not pay their bills on time because they don't want to. But a lot more people have poor credit history because they grew up in, say, poverty or low income families, or they haven't had access to financial opportunities, or for instance, they went through like a medical crisis that was very expensive and drained like all their savings, and they had to struggle to pay their bills. Or as we saw during the COVID-19 pandemic, they could have lost their jobs because of the pandemic and business closures through no fault of their own. There are a couple of other possible ideas. Another is that basically they've done calculations and figured out we can make more money from these wealthier consumers than these poorer consumers. And so we want to focus on the upper class people that will buy additional products. And a third might be they figure we can exploit these people. And since they tend to be lower income and and their voices aren't heard as much, we're more likely to get away with it. It's unlikely that they're going to try and contact regulators or state legislators or organize change to try and reduce auto insurance costs and call us out. So those are some possibilities. I would love to know more. I would love to get the insurance companies before a committee and grill them on this, or have a bill that requires them to explain exactly what's going on, but they fight any attempt at transparency tooth and nail.
That's interesting. That's really interesting. And of course, that's the reason why advocates like JOTF, and we thank you, of course, for being our think tank buddies on these issues when it comes to trying to push legislation on this capacity, because, we tend to find, at least in our experience, that lower income communities, don't have that voice, don't have that power to be able to defend themselves when it comes to big business like insurance industries, just kind of launching these kind of aggressive attacks that are financially based. And then we end up in a position where, at least in my research, 47 Baltimoreans were incarcerated simply because they could not afford auto insurance, or they drove without it in the last 5 years. That may not seem like a lot, but what also is key is that 47,000 individuals were hit with citations for driving uninsured in the same communities where auto insurance is unaffordable. So at some point, the rock has to break. And so I think more community activism and more knowledge needs to be given out to the communities about these issues. And that's, of course, why we have you on here today. Doubling down on that, I just wanted to go through some of the things that we have heard. So I should probably, full disclosure, JOTF, Consumer Federation of America, Maryland Consumer Rights Coalition, Consumer Auto, and others have been trying to change some of these non-driving factors in the state of Maryland, getting rid of the use of credit history, trying to make zip code, the territorial rating, as it's called, more, I guess, amenable to a larger swath of the population. So that way it's not based on zip code, but more based on a region, like let's say Baltimore County or Baltimore City or Anne Arundel, or shifting it in that capacity so that it's not so heavily racialized. But my question for you, when we were testifying, when you're in the lobby, when you're having these conversations, you hear a lot of things from the insurance lobby, right? I've heard conversations saying that one, we don't really want to insure them because they're too much of a risk. We've heard things such as, well, there is no real issue, just shop around, and then you won't have that problem. And if individuals are shopped around, they can get a lower cost. So I kind of want you to respond. Let's start with just that one. The just shop around model, is that amenable for a lower income individual, or from a lower income community, I should say? Is it amenable that they just shop around and they can get a better payment based off of this kind of capitalistic, the more competition there is, the lower your cost will be? What do you think?
No, shopping around is good, but it's not enough on its own. To give just some background, shopping around for different auto insurance quotes is quite useful, and actually I strongly recommend it. It can save you money, but it's not a cure-all for everything. It's well worth your time to spend like an hour or two, sit down and look at different auto insurers for different quotes. You can get a lot of them online: Allstate, Geico, State Farm, Progressive, Nationwide, and you can find better deals and save money. I actually recently switched from Geico to Allstate because Allstate offered a better deal, and it wound up saving me about $30 per month, which adds up to about $360 saved per year. But here's the problem. Most of the major auto insurers use these harmful non-driving factors, like someone's credit score, or they discriminate against you based on your education level, or they discriminate against you because of your zip code and the neighborhood that you live in. So if you have poor credit or live in a low-income neighborhood where auto insurance premiums are really high, shopping around for different auto insurers will probably save you some money and help a bit, but it's not enough on its own. Like, for instance, if you switch to a company that gives you a better deal and you're saving about $30 a month, and so maybe about $360 per year, that's good. But if you're already paying an auto insurance premium that's about $3,000 annually, you're still going to be paying about like $2,640 annually, which is still a significant burden. So shopping around is going to help you, but again, it's not enough on its own. We need meaningful structural reform that will actually bring costs down.
Yeah, and doubling down on that, just doing some math here, and I'm not a math major, so forgive me if my numbers are not as fine-tuned as they ought to be, but an individual making roughly $15 an hour is going to be bringing in maybe $32,000 a year, right? And if you're talking about an individual paying $3,000 in just auto insurance, that's 10% of their gross income before taxes, before dealing with mechanics, before dealing with garnishments, child support, whatever that might be, or rent and everything. That's $3,000 a year that's going straight to the auto insurance industry. Can I ask you a really strange question? I've also noticed this thing, and this is something that you hear a lot when it comes to auto insurance, and that is that, it's kind of like a mafia middleman in the sense that you have it, and I'm not trying to be too aggressive by insulting the industry. I'm just thinking about this, right? You have it, but then when you use it, then they start to increase your cost. Can you explain how that model works, or if that's just not necessarily true?
Well, theoretically, auto insurance operates like this. The company tries to discover how much of a risk someone is to insure, and you pay the premium accordingly. So the idea, at least theoretically, is that if you get into an accident and say there's damage to your car, or someone else gets hurt or you get hurt, that shows theoretically that you're more risky. And so the insurance company looks at this and is like, oh, this person used to have a perfect driving record, now they don't, so they're obviously risky, and so the risk goes up, so we're going to charge them more. Now, in practice, someone could have an accident for a variety of reasons, and they're not always at fault. It could be that someone else was a very bad driver and it's their fault. It could be that they it could be something that they was simply very unlucky. It could be that someone was out driving because they had to do an essential errand and the weather was really terrible. Like, say, for instance, one of the storms that we saw in Maryland just yesterday. But so again, there's some truth to that, but a lot of times insurers increase people's premiums even if they're in accidents where they're not at fault.
That's wild. So I want to throw this out here. I've also heard, in testimony, if there was a real problem, then there would be more complaints to the Maryland Insurance Commissioner, so that there would be more kind of a bigger uproar of more actual individualized auto insurance paying citizens crying to their commissioners, saying that, this is a real problem. Can you explain or I guess debunk that? I mean, is it just that individual Marylanders just don't care about the issue? Like, what is it that is stopping more people from kind of calling out these non-driving factors that are raising up the cost?
Well, that's a good question, and there's several actually answers. The first is that actually most people don't know about this. Most people are unaware that auto insurers use various non-driving factors like your credit history, your education level, your occupation to discriminate against you. And insurers generally want to keep it that way. They don't want this fact to become widely known, because when people do find out about this in polls, they think that using non-driving factors is unfair, and most of them oppose it. Another reason is that auto insurance is a topic that people tend not to think about. It's something that a lot of people don't have much interaction with until you need it, say if there's an accident or there's a claim or something along those lines. And so there isn't a lot of general knowledge. And Consumer Federation of America, we've been working to educate people and increase the general knowledge so that folks are aware of this. And also complaints to the Maryland Insurance Commissioner. Many people don't even know that insurance is regulated at the state level. In Maryland, it's done by the Maryland Insurance Administration. A lot of people couldn't even tell you what the Maryland Insurance Administration is. I actually didn't know about it before I started working for CFA. So those are a couple of reasons why there may not be complaints. But people care quite a lot about this, and they care quite a lot about auto insurance costs. Although they don't have a lot of information about it. And actually, one more thing. People who are uninsured but driving anyway, they may not be complaining about it because they're afraid of drawing attention to themselves, because they're like, I need to drive to get to my work, to pick up groceries, to take my kid to school, but I have to break the law because the costs are so high, and they don't want to draw attention to themselves.
That's an interesting point. I love that. And I was sitting there thinking about what you just said with regards to not drawing attention to yourself. Because of course, you want to write a low profile if you are, not necessarily driving in the most legitimized position. I wanted to ask you this on that same note. You mentioned before that there's a kind of an intersection between race and cost. So I think I may have heard you say before that in predominantly African-American neighborhoods, I think I read in your report that defining that as in neighborhoods that are 75% African-American, that those individuals were roughly 70% more, I believe I read that, than individuals in predominantly white neighborhoods, being 75% Caucasian or more. I'll stop with that. Is that accurate? Is it as simple as race, or is there something a little bit deeper there that's not being considered?
Yes, basically we did an analysis in Maryland and found that as the percentage of Black residents in a zip code goes up, so do the auto insurance premiums. People living in zip codes that are 75% Black or more wind up paying much, much higher, hundreds of dollars more. It's a lot more, sometimes like even 100% more or even greater than that. And we've also found that the use of these non-driving factors disproportionately harms Black consumers. For example, because of past and present discrimination, Black consumers are more likely to have lower credit scores. And so even if a company was doing nothing else, if they used credit scores and charged people with poor credit more, that's going to disproportionately affect Black drivers. There are some other factors have a similar impact. For instance, if they discriminate against auto insurers, discriminate against somebody based on their education level, well, fewer Black people, again, have gone to college, again, because of past and present discrimination and lower incomes. And all this stuff adds up. So they're getting hit with like multiple factors, not just like facing open discrimination. They're also facing discrimination based on the zip codes and neighborhoods that they live, and discrimination based on credit score, and all that stuff disproportionately harms Black drivers.
Yeah, that's absolutely painful. And the reason why I wanted to ask that is because if you look at the state law when it comes to insurance, I believe it's insurance code. This is in Maryland law, the insurance article 27-501. It says that, using race and stuff like that is supposed to be illegal. And I've also heard the insurance industry make that case that, that they're not allowed to discriminate on things based like race or something like that. But you still see these massive disparities. So how is that allowed to happen? It's supposed to be illegal. Or as in another example is credit history is not supposed to be something based on an individual's income. So let me just ask you this. Why zip code? Like why, when I think about race, I think about that it is zip codes do tend to be a little more racialized. And then I see, that the insurance industry is using zip codes directly as their territorial rating. And a territorial rating, for those of you who are not aware, is simply, it's kind of like I want to say it's a federal code. Michael will correct me if I'm wrong, but that says that, your insurance has to have some type of basis in differentiating in cost based off of location. But in Maryland, we base it primarily off of where your zip code is. So 21215 in Baltimore City is going to be paying something different than 21231 in Baltimore City or 21213, which is, zip codes do tend to be rather racialized. So I guess my question is zip code a proxy for race? Is credit history a proxy for income? And why? I mean, is it really just the idea that, we just believe that African-American communities are riskier? And then what do you say to those African-American communities that are higher income, like in Fort Washington, for example, where I was born and raised, right? They still also have to pay higher insurance premiums than those in upper income white zip codes. So I guess my question is it actually just racialized, or is there, why zip codes in the first place?
I think they started using zip codes initially because it was to try and measure like the greater risk of density. But in practice, yes, it is very racialized. The auto insurers claim that they're not discriminating based on race, but in practice, most of the factors they use, like zip code or credit score, are pretty close proxies. Since Maryland's a pretty segregated state, unfortunately, charging people higher premiums based on their zip code, it disproportionately affects people of different races. And to a big extent, there is a long history of racist discrimination in the insurance industry, not just auto insurance, but life insurance, homeowners insurance. And there's still, the legacy of that is still pretty strong. And there's actually been many cases brought against a bunch of insurance companies nationwide, Erie, Geico, and others, alleging both open discrimination, basically like a form of like racist comments and behaviors, and also saying this factor or this practice disproportionately made Black consumers pay more. And some of the cases have resulted in some pretty large settlements. And all that has pretty big impact, unfortunately. We've tried to push for the elimination of racial discrimination, pointed out that these factors disproportionately hurt Black consumers. The auto insurers have basically done a see no evil, hear no evil, speak no evil. And they say, if we're not explicitly doing something based on race, it can't possibly be racist. And if it does have a racist impact, first off, they claim it doesn't have a racist impact. And even if it does, it's not our fault. They claim it's just the market operating as usual.
Ah, yes, the wonderful power that is the free market. It works so well for everybody. All right, moving right along. We got the problem. I guess that's the challenge. That's the issue. I'm glad, and Michael, that you kind of broke it down and looked at all the different factors there. And I thank you guys again for your work. My question now is solutions. So I know we have all these issues in Maryland, the use of credit history, the use of zip codes. I just wanted to know, how are non-driving factors specifically being handled in other states? Has there been any progress in eliminating this? Is this a nationwide issue, or is it more state for state? And what's been done in other states to kind of like resolve these auto insurance cost disparities?
It's a nationwide issue, but some states have been making more progress than others. For example, California, Hawaii, and Massachusetts actually have banned the use of credit history in auto insurance, which has lowered prices for consumers and generally helped them there. And auto insurance markets in those states function perfectly well. There's a bunch of other states that have banned other non-driving factors, like several states have banned the use of gender. New York recently, in the last few years, banned the use of someone's job or their education level, saying that this factor resulted in harmful effects. And in a lot more states, lawmakers have introduced a bunch of proposals to ban various factors. Maryland legislators considered some things. Delaware considered a ban on gender. The insurance industry fights these efforts tooth and nail, but there is progress being made. And banning the use of non-driving factors would be a big help to consumers. It would lower costs, and it would significantly make the auto insurance market a lot more fair. And there's also a couple other approaches. Colorado adopted a law which is interesting. It basically bans not just unfair discrimination insurance, but also the use of information, data models, and algorithms that result in unfair discrimination. So, for instance, if insurers use a credit score and it results in unfairly high premiums to, say, Black Americans, they have to look at that and they have to fix it. And the Colorado Division of Insurance is currently organizing and holding a stakeholder process on how to do this and what insurers should consider. So that's one promising thing. And another thing is that you can have what is called a low-cost auto insurance program. California actually has one of these things. And basically, it provides a bare bones insurance policy to good drivers, which lower insurance limits than like the coverage you'd normally have to get. And the rates there are quite cheap because they're there just to cover claims and expenses, but not to earn insurance company profits. So it's like kind of an insurer of last resort for good drivers. And it's intended to help them get insurance if they couldn't find it in like the market otherwise. The idea is that you would get it for like $500 or less per year. And there have been similar proposals to do something in Maryland, which we think would be a very good idea.
Well, you already jumped to my next question. Yeah, so I was going to say, looking at policy solutions for Maryland, do you think that there's going to be resistance to a low-cost auto insurance program? And just flushing out what it was, we were looking at it in the state of Maryland, is a low-cost auto insurance program for drivers who have basically 3 years of a clean driving record. So that way, it's not even looking at your driving factors. It's, do you actually drive? Do you have a bunch of accidents? Do you actually drive well? And it kind of just gives you a bit of a discounted rate. The insurance industry, have they, even in California, I mean, were they in opposition to these low-cost auto insurance programs?
It's hard to say. I think there will be some opposition because in the legislators, there's always like a certain bias in favor of the status quo, and some legislators will just be opposed to any new thing that comes along. Some other legislators might dislike Baltimore and not want to do anything that helps average folks there. But I think that many insurers will either not be opposed or just be sort of a standoff to wait to see how it turns out. But an low-cost auto insurance program would be immensely helpful to people who are paying like incredibly high premiums, like as we mentioned, $3,000 per month. And it wouldn't have to be exactly like California's program. It could be shifted around. The limits could be changed a bit. There could be the costs could be slightly lower or higher. We want to be flexible on what works for Baltimore, but it's a very good, but this is a good program. It's in California, but there have been other proposals, not just in Maryland, but other states like Minnesota and other places to establish similar programs. And it would bring down costs a lot. It's not fair for Maryland to require drivers to get auto insurance and then turn around and punish them through fines or suspending their license or even imprisoning them when the product is too high because regulators have failed to keep it affordable.
Another solution that I've been seeing has been something called telematics, where they kind of examine like your actual driving ability. I know I think there's like a DriveWise app and stuff like that, where they look at your actual driving, how often you start and stop, and trying to using that to give people discounts and things of that nature. I know there's a company called Root, also one I believe is called Loop, that has been kind of getting rid of non-driving factors altogether. What are your thoughts of looking at that model, this kind of telematics model? Well, first of all, can you explain what telematics are? And then, do you think that's effective for lowering the cost of auto insurance for lower income workers?
Sure. Basically, telematics programs are when you have either an app on your phone or a device that gets plugged into your car and it measures your driving behavior. And the insurance company gets that data on your driving behavior, and then they calculate your premium based on that. So for instance, they could calculate your premium based on how much you drive, which is by far the most logical factor to affect like your insurance cost. It could also be based on, like, say, how quickly you drive, or whether you make sharp turns, or what time of day you drive. And we're of two minds about telematics. We think that anything that moving away from harmful non-driving factors is a very good thing. And this technology could have a lot of benefit to consumers. It could more accurately measure driving behavior. It could promote safe driving behavior. It could make auto insurance premiums more accurate and more fair. But there's also significant problems. For example, there is big privacy concerns about what data is actually being collected by these insurers. What are they using it for? Will they use it to actually try and be fair to consumers, or will they just use it to increase people's premiums and perpetuate old biases? And most states, Maryland included, do not have like adequate telematics regulations. They don't have specific rules saying, here's a rule to protect consumer privacy. Here's the only data that you can collect, and you must use it to only for calculating auto insurance premiums. There is no restrictions on whether that data could be monetized or sold to other companies that could then like try and like advertise to you based on that, or whether they could use that data for even more nefarious purposes. So we think telematics is promising. You mentioned DriveWise. That's actually that's the telematics program that belongs to Allstate. And telematics may be good. It can save people money in certain cases, especially if you do not drive very much or if you're a safe driver. But there's also serious privacy concerns. And we think there should be much stronger rules to protect consumers. And right now, that's just not there. And you've mentioned also Root and Loop. These are these two new companies that are mostly telematics based. And we think, again, they show great promise. Root has actually advocated in support of dropping the credit scores in auto insurance, which is a very good thing. But again, we think there needs to be like good oversight from the state insurance departments before we can and say this is a good thing.
Gotcha. And my last question on that, thank you. Just looking at policy solutions, the elimination of credit history. I'm just trying to find, I try to be objective and try to look at a policy from as many angles as I possibly can. When you look at something like credit history, right? The elimination of the use of credit history, from my research, I'm only seeing upsides, right? But I feel I listen to auto insurers, they're going to have the conversation about that it's, it's not a proxy for income, but that it's used to determine how many times people are actually going to make claims, or how often they're good at paying their bills. I just wonder, what are the actual downsides? I guess why use credit history, but also what are the actual downsides, if there are any cons of eliminating the use of credit history? I'm just trying to find, if there is like a waterfall that's going to break, a dam that's going to break just because we got rid of this non-driving factor.
We don't think there's going to be any big downsides to the elimination of credit history. We think it might cause some people's premiums to go up briefly, but it would also cause other people's premiums to go down. Whereas people who have been like unfairly charged more based on their credit history, they'll now be paying less. And we think overall it's going to benefit auto insurance markets considerably, both consumers and even insurers, because the data afterwards and the premiums will be more accurate and hopefully more based on driving behavior. So, well, the insurers will claim a lot of times that when there's the reforms like protect consumers or make auto insurance more fair and equitable, that the sky is falling, this is going to lead to the downfall of our business. And the facts just don't bear this out. As we said before, there's a number of states that have banned various non-driving factors. Auto insurers still operate there. Many of the same companies that, in fact, I think almost all the same companies that operate in Maryland sell policies in those various states without those non-driving factors. And they managed to do it perfectly well, so they could do something similar in Maryland.
Wonderful. Thank you for that answer, man. That's good. Like I said, I try to keep things fair and balanced here. So I guess that's pretty much all I wanted to discuss with you in this current moment. I wanted to know, since CFA does handle a variety of different insurance related topics, are there any other initiatives that you are working on, I guess, regarding auto insurance, or anything else that you would like the audience to be thinking about when it comes to this issue?
Yeah, actually, there's several things. We're working on an education campaign to ensure that consumers know what factors go into auto insurance premiums. And we're encouraging folks, if they have run into unfair discrimination, to file complaints with insurance commissioners. You can Google your insurance department, and it will be one of the first things that comes up. They should have phone numbers and emails. Call them or email them and tell them you wish to file a complaint, and they will get back to you. It's their job to actually protect consumers and protect you against unfair discrimination. You can also call your state legislator and urge them to support bills banning the use of non-driving factors. Insurance is unusual in that it's regulated almost entirely at the state level. So reaching out to your state representative or senator is a lot more helpful than reaching out to a member of Congress, which actually doesn't have much power right now. And also your state representatives and senators, you can reach them more easily. You can talk to them and they're not as overwhelmed. You can also contact your state insurance department and urge that they ban the use of someone's credit score, their education, their occupation, and also say that they should aggressively prosecute wrongdoing by insurance companies. It always helps when consumers call in and voice their opinions. Some insurance departments are very strong and want to protect consumers and do a good job. Others are more middle of the road. And in still others, there's actually been the problem of the revolving door, where high-ranking officials in the insurance department work there, they do their job, and then they leave to go get jobs in the insurance industry, sometimes leading insurance companies. That's pretty big, obvious conflict of interest. If you have someone who's working in the insurance department, but then wants to go, say, like get a senior job at Allstate or Geico, they're probably not going to be very aggressive in regulating that company and correcting any wrongdoing. We're also working to try and change that. And finally, there's actually one more thing. We encourage people to also file complaints with the insurance department if they feel they're being discriminated against in claims handling and fraud investigations. Recently, there was actually an article about State Farm and racism and discrimination there in the New York Times. A whistleblower, Dr. Carla Campbell Jackson, she basically blew the whistle on unfair discrimination based on claims that were being filed in various inner city neighborhoods. She said that State Farm was pressuring the investigators to look at these claims, scrutinize them closely, and deny them to a much greater extent than anywhere else. And that was because these were inner city African-American neighborhoods. So that's something to be aware of. The case is ongoing and a bunch of states are investigating State Farm. But if you feel that you've been like a victim of unfair discrimination, please reach out to CFA, to your state insurance department. Don't be afraid to speak up.
And, just doubling out on that for a second, JOTF also, you can contact us at Christopher@JOTF.org, Christopher@JOTF.org. If you were interested in filing an insurance complaint with the Maryland Insurance Administration, we have some experience with this. And so we would love it if you have that issue. You can always reach out to us at Christopher@JOTF.org, and we can help you with the filing process. It's rather simple, rather easy. We have a whole system that we have in place for it as of right now. So Michael, I want to thank you for taking the time out today to have this very important conversation with us about the cost of auto insurance, non-driving factors, and what we as Marylanders can do to get this situation under control so more people can gain equitable access to employment and don't have to risk incarceration for just trying to keep their jobs. Thank you so much, Michael, for taking the time, and look forward to speaking with you again.
Thanks, you as well.
This has been Money Talks, the JOTF podcast, where our mission, as always, is to help lower wage workers advance to higher wage jobs. If you enjoyed this video, let us know by leaving a like, subscribing to our content, or sharing this video with a friend. And do not hesitate to donate to the work of JOTF by clicking the link in the description box below or going to jotf.org/donate. I'm your host, Christopher Dews, and I look forward to seeing you at the next one.